Ladies and gentlemen, welcome to Wealth Dawn with me, your host Norbert PM. Today we're going to do a good old Coke versus Pepsi duel. Which stock is better to buy right now, or should you sell it, or should you just hold it? Now, it's going to be my personal opinion, so please take this with a grain of salt and always do your own research before you buy stock. So both Coke and Pepsi are extremely far down for the year. First of all, let's do an overall market analysis. Today is Tuesday, 12th of November 2024, and we have no major economic events, especially from the United States. But tomorrow, we're going to have core inflation rate year to year and month to month, and this may impact the market negatively. So we are going to do also a risk evaluation for Cola and Pepsi. So let's start with Coke. We're going to go through each step. So first of all, we have risk in the markets due to the fact that we have upcoming important events. So let's go to our Wealth Dawn application and let's type in here market event risk. And we're going to say that this is a high risk for the moment. So we're going to start out with 75%. Now 75% is how risky is this investment? And the riskier it is, the higher the percentage. Also, let me zoom in here just a bit. Now let's take a look at Coca-Cola first of all. So on a yearly basis, so on the entire year, starting from November till now, Coca-Cola is pretty much oversold. You can see the RSI. Let's add this to RSI. The relative strength index is currently at 22.93. which we're going to evaluate as very low risk. The MACD, the buyers and sellers, are flipped to the sellers are currently winning, so MACD on strong sell signal. So we're also going to evaluate this as very low risk. Now, you know what? We're going to evaluate this as low risk. We're going to evaluate a MACD strong sell as a low risk. If it flip back up into a buy signal, then it will be a very low risk. Let's add this as a low risk. So currently we are at 35% for Coca-Cola if you should buy it right now. How risky would be this bet? Because you're always betting on something. It's not a sure investment. Bonds are sure investments. That's US Treasury bonds, I mean. Now let's take a look at its PE. We are currently at the 26.31 PE ratio for Coca-Cola. If you take a look at its historic average, Coca-Cola is trading somewhere in the range of 20-ish. So these are the past 10 years. Well, I would say that 20 would be a normal PE for Coca-Cola. So it is above its normal PE, but just a tinge. So let's say PE at 26, higher than an average of 20. Also, this is a market average, but I could also go down to 19, I believe it was roughly the average for Coca-Cola. And I will evaluate this as a medium risk. Now let's talk dividends. Coca-Cola has a 3.6% current dividend yield for the entire year, and its next ex-dividend date is the 29th of November. So it's basically just in a couple of weeks. It also has a payout ratio of 79%, which is pretty bad. I think that it's over 50. It's not sustainable for the long term, but Coca-Cola is one of those great dividend paying companies. So if we take into consideration that if we buy Coca-Cola now, we will also get its next dividend, which is a 0.48 cents on the dollar. So for each share that we will buy, current price is $63.35. So if we would invest, let's say we would buy 10 shares, which would be $630, we would get $4.8 guaranteed. So that's not a lot. Maybe a 100 share investment would be then better. We would get from that investment $48.5 back guaranteed, minus taxes depending on how you're handling your taxes, or it could be directly reinvested if you're using the reinvest method. So let's categorize this that ex-div date close. And this would also lower the risks. It's not a very low, but a low risk for us losing our money. Now let's take a look at financials. For the upcoming year, Coca-Cola will increase its earnings to $0.74 a share, 86, and well, they're estimating a Q3 in 2025 as a decline in revenue. But what do the technicals say? Currently, and please take this with a grain of salt, Coca-Cola is planning to have an average return of 18.51%, which would be for the next year, which would be above market average. So this is why it's categorized as a buy. So let's also add this to our risk. So beating above market average returns. Now, how above? It's almost double, so I would leave it at medium risk. Okay, so I would stop here with a 38.33% chance that our investment goes sour. So as you can see, no matter how hard you try, there's always risk in the market. Now let's move to Pepsi. Again, if you do our market evaluation, Pepsi also has market event risk due to upcoming events, which we'll categorize as high. Its RSI is not underneath the 30 level, it's actually above, it's at 32. So we're going to RSI at 32. We're going to say that this is going to be a medium risk for us, or just a low risk. So everything that is under 50, I would consider low risk. The MACD is always the complicated one. So it isn't a buy, it isn't a sell, the MACD, but I think this entire thing is oversold. So strong sell, looking to switch back now. I would consider this a medium risk until it's going to go back, because this can continue here. The RSI can continue to get oversold. Also, the value could still go down. So let's leave this at medium risk. Its PE ratio is currently at 24.21. And if you take a look at its 10-year average, which is, well, it's up here in the 20s, let's say a PE of 24.21, which is above 20. Let's leave this also as medium risk. Now, Pepsi, as does Coke, pays out a dividend. In Pepsi's case, is 3.30% per annum. But its next X date is, well, it's pretty much far. The last one was in September, so the next one will be probably in December before the earnings. So buying it for the dividend, I wouldn't consider that to be a good idea. And who knows what can happen until then. So ex-div date long. So let's put this as a high risk. Although taking into consideration how good of a dividend payer Pepsi is, maybe we could still leave it at medium risk. So now let's take a look at some technicals. At the current moment, Pepsi is considered to be on a sell, and even so, if this would sell off further, maybe there would be a better buying in opportunity, because the forecast for the next year, the average would be at 11.06% market return, which would be, well, pretty much in line with average market returns. But due to the fact that the negative side of it would be -9, I would consider PepsiCo momentarily with its future forecasted price as a high risk. So I would consider this to go in range or below market returns. Okay, so let's compare these two. On the left we have Coke and on the right we have Pepsi. So this is only my analysis, and currently I would say that Coke is the better buy if you would buy today Coca-Cola. Now, why are their prices down? So Coca-Cola, ticker symbol KO, and PepsiCo, ticker symbol PEP, are both down for the year due to maybe several reasons. First of all, let's take inflationary pressures. Rising costs for inputs like sugar, aluminium, and transportation have squeezed probably profit margins from both companies. Economic uncertainty, like concerns about the potential recession and slowing economic growth, have led investors to seek safetier investments, causing maybe a sell-off in both Coke and Pep. Also, currency exchange rates. With the presidential election behind us, a strong dollar has negatively impacted the international sales for both companies, as foreign currencies revenue translate into fewer US dollars. And of course, we shouldn't forget the changing consumer preferences. Consumers are significantly shifting towards healthier beverage options, which could impact, of course, long-term growth prospects of both companies. Now, it is important to note that while both Coke and Pep are down for the year, their performance has varied. PepsiCo has significantly outperformed Coca-Cola due to its diversification in snacks and its cheaper valuations. Overall, the decline in PepsiCo and Coca-Cola stocks reflects a combination of short-term headwinds and long-term concerns about the beverage industry. However, both companies remain strong and stable with long track records of dividend growth and resilience. So which one should you buy and also hold? Well, that you have to figure out on your own. But for now, our risk analysis shows Coca-Cola would be the winner. Now, don't forget that you can also find us on Substack, where we post all of our analysis, and also check out our podcast. And of course, like this video and subscribe to our YouTube channel for daily updates and weekend portfolio reviews with what we bought, what we sold, and why we did it. This being said, I'm Norbert BN. Thank you so much for watching. Catch you next time. Bye-bye.